Gaurang Shah, Assistant VP at Geojit BNP Paribas Financial Services, joins us on the show. Gaurang, your expectation on what we can hear from the RBI and whether or not something material is going to be announced, or do you think it's going to be a damn squib?
Good afternoon, Aisha. Well, after what the government has done, I don't think they can perform anything worse from here. They've already done their worst. And in terms of Reserve Bank of India, well, a little elbow room over there with the governor. So remains to be seen what the announcement is in terms of strengthening the fall in the rupee, which yesterday we saw it falling to about 57.30.40 during the lowest level against the dollar. So you've seen some strength on anticipation that definitely there'll be some amount of positive news coming out from the government side, and government would possibly induce the Reserve Bank of India to do something. But the most important thing, Aisha, over here to see is how much of positive news comes in terms of the FDI flows, because only when your dollar inflows start coming in will your rupee will actually become a little bit much more stronger. As of now, even if there is some piecemeal announcement coming, I think what strength we've seen in the rupee will be lived up for temporary, and of course the global demand in dollar remains over here. So overall, I don't expect any miracles to happen, but yes, it would bring in some sign of relief, at least in the short to medium term.
Gaurang, specifically what we are picking up is that the government is likely to hike the foreign investment caps for both corporate bonds and for G-Secs. If that were to be the only announcement, do you think that will do anything much to strengthen the rupee, or is that something that the currency market will eventually ignore?
Afternoon, Sandeep. I think if it is only on the G-Secs and the bond side, the reaction has already been there, and I don't think that you will see much strength coming into the dollar. And of course, it will be prudent to see post this announcement how much of that incremental flows comes in via these new relaxation of regulation that Reserve Bank of India will do. So it's a big question mark as of now.
Gaurang, there is part of the market which is also talking about perhaps a 25 bips cut in the CRR. Looking at the way the banks have been behaving and the way the currency and bond markets as well have been faring, does it seem like this is something that the market is already beginning to price in?
Aisha, as a brokerage house, even before the credit policy, we were very clear that there will be no cut coming in either in CRR or repo. And now that our belief has come true, I don't think there is going to be any eagerness from the Reserve Bank of India to go ahead and prematurely cut either the CRR or the repo. Let us not forget, we have a deficit of monsoon by almost about 15 to 25 days. In case if this scarcity of monsoon carries on, then possibly in first, second week of July, your inflation from the agri-commodity side will be at a much more elevated level, which will again create problems for the expectations of the interest rate cut, either in form of CRR or repo. So I think this is just a belief on the streets that is there. I don't think there is any evidence of it materializing.
So Gaurang, what would you advise investors to do? Should they look at sectors that like FMCG, pharma, or should they look at specific stocks across sectors and invest?
Well, FMCG, pharma, FMCG, I think, Sandeep, we should avoid as of now, because scarcity of, rainfall does create input cost issues for these companies, like the HULs and the ITCs and the Godrej Consumer of the world. We will possibly just avoid and see how the monsoon activity picks up in another week or a fortnight. So pharma, yes, definitely it's a buy. But on the mid-cap side, we have a larger concentration. I think on Friday we saw stocks like Strides Acrolite and Divi's Laboratories making a new 52-week high. Strength lies in these kind of stories, so you should follow them. Amongst the other names in the mid-cap pharma, we have Glenmark, we have Lupin, we have Sun. In the frontline boys, we have a reduce on Ranbaxy and a hold on Dr. Reddy's. And I think just about yesterday or day before yesterday, we came out with a buy coverage on MNC Pharma called GSK. So we will be very specific over here, and IT, which we were underweight till the Q3 numbers were out, third quarter numbers were out. Post the fourth quarter numbers, now we have taken a positive view. Selective, we've come out with a recommendation on Tech Mahindra, Infosys, HCL Tech and CMC Limited.
Besides the names that you mentioned, Gaurang, is there anything that you like out of the frontline stocks?
Well, you were mentioning about banking stocks and discussing the bank nifty, Aisha. So as a brokerage house, we are very much positive on the private sector banks, but not at current levels. We anticipate, close to about 16,500 levels on the Sensex, close to about 4950 on the Nifty. That's where we'll become more comfortable and start deploying money again. Immediately in the short term, what we've been advising is book out, stay on cash for some time. In the banking pack that I was mentioning earlier, in the private sector bank, well, Axis, ICICI, Yes Bank, IndusInd Bank still remains our preferred buy. In the PSU side, we have Bank of Baroda and Bank of India. And of course, there are concerns if there is going to be shortage of rainfall, then definitely stocks like Hero Honda, M&M, Bajaj Auto will take a beating. But on the flip side, close to about 230, sub 230 levels, Tata Motor looks extremely attractive.